Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for February 4th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis for the current session. Here is the daily chart of the ES. And what we saw here recently was price reach our 1939.5 target right there. After we had that tail event here, we called for a move into 1939.5, and price basically went to 1939.5 and just sold off from there. So it was a perfect move after we identified that this was the low that we were looking for during this move downward. And then since then, what we've seen is price attempt to hold above the HVN, call it value, and then you see price go offered through value into the 1870 zone here. When price bounced back in overnight trading here, what we've seen is price retest value and then go offered initially here. When that happens, that usually leads to further weakness ahead. That's the market attempting to hold above this HVN and then failing, and when a retest occurs from below, the market is rejecting that price point as value right now, or as an HVN of any sort that could lead to more chop movement. Instead, it's being offered right now. So this is early indications of a potential rejection of this value point, which would imply a retest of this value point yet again, which is 1811.25. So right now, that's the early idea. We're going to see how this thing continues to play out. Obviously, if price is able to push back above 1921, then that would lead to further chop scenario here, as we had called before. So when we look back to the August range back here, this key range move, this swing move downward, very similar to what we've seen here, this big swing move downward. What you saw afterward was a compression phase where price basically just traded in a range, and that basically created the fuel for the next wave of movement, which happened to be up. Same thing is happening here. Look for further development here around this zone. And the idea really is, if this is kind of the micro profile in this range, ideally what you would see is kind of this thing go up here and come down to here, go up to here and come down to here, and trade around that zone. So if this thing is going to go offered at this zone, that would imply a move not only to here, but also likely lower into the next HVN. That's why I'm saying if this thing is being rejected here, then that's why I'm changing my course of action. So we're watching this very closely. If 21s continue to be offered, the next test is going to be 1846. So if you're a bull here, there's no real edge unless you come into 46s here. That's going to offer a potential bounce opportunity, and even if it does bounce, it's still at jeopardy of seeing a run through into 1811, so be careful. The bears have had the upper hand here, and that's very evident. So looking at the intraday time frame, you can see here we had a key range that we put out overnight, pre-market rather, the previous trading session, 1885.75 to 1909. We saw expansion through the bottom. Price bounced perfectly off 1865, which is an MCV and then rallied all the way until it went to 1921, which is that HVN. So basically it rallied between HVNs. And then what you see here is obviously price going offered in overnight trading, going offered through value at 1906. At the very least, if you're going to go offered through value here, 5-day value, that would suggest a move to the bottom of value, at least back toward 1889.5. So that's at least where we're likely going to see a move to early here in the session. And then from there, again, if this thing is going to be offered because of this failure to get above 1921, then I would start watching the Fed number here, 1903.75. That's been a very important number here during the last couple of weeks, where you see here's the Fed come out and you see how price held below that number, then it held just above it and rallied, then it came back to it and held, then it dropped down back to those recent lows, back to the Fed here, and now was rejected above it again. So right now the Fed would be the next key level to watch, is 1903.75. If there's a failure to get above that zone, or a retest of value from below at 1906 goes offered, then that could imply a continuation back toward recent support, 1865. So that's what we're looking at here as our idea for the upcoming session. Let's take a look now at crude oil. This is a daily time frame of crude. This one saw an outside day, outside buy signal basically. This low was lower than the previous session's low. This close was higher than this high. I call that an outside buy reversal setup. And now coming into this previous high here, you want to defend it as a bull and look for new highs. And that's currently what's kind of happening right now. We've seen a push right into that zone, and right now it's already defended. So if we look at that price level, it's going to be about 3160, 3160, 31. Yeah, that's a good zone, and that's a minor little dip here in the profile, not significant, just a little dip there. And holding that level would suggest a continuation toward 3343. Failure to hold above that level opens the door to another retest of that major 2925 zone, which, again, as I mentioned yesterday, well, that was the last line of defense. Price came close to that zone and then saw a slingshot effect. So we know this area is bid. You can see on the profile how narrow it is after the bulk there. So nice little volume ledge here forming. And the same thing can be said on the top end here. 35.25 is likely a first test sell opportunity, and this is the range we're building right now after this impulse move. So short term, holding above this zone here implies a little bit more higher. Failure to hold it implies another rotation back down. Right now we're just trading a range. Let's take a look at the intraday time frame. On the intraday basis here, what you can see is the previous session had a lot of big time movement, especially after the inventories came out. You can see the big squeeze here, the hold on the previous close, and then the rally. And 31s turned out to be a big time level there. 31s was huge. There's a key level for us. That's the one we've been watching. You can see how it had been offered initially, and then boom, once it went through in the premium trading room, we identified 31s as a retest buy, and that was ahead of that move right here. So I would still say 31s is still an important level. You also have an LVN just above that as well, 3130. And that zone is going to be important to watch right now. We have a short-term squeeze up. I would say this thing should continue squeezing higher, as we mentioned, and failure to hold above that 3150, 3160 zone would suggest a retest of 31, which again has been defended so far. All right, let's take a look at gold on a higher time frame. This one continues to squeeze per our analysis to begin the year. We've been right on the money on gold. It's been fantastic to watch this one. We've actually had this rounded bottom here that we were talking about. We started the year actually talking about this range. Once we broke it to the upside, I said look for a pullback, and any pullback should be defended, and that could give us a rounded bottom feel here that could get us to the next upside targets. And so far, it's been just on fire on the way up. And now we had that initial target at 1169s a long time ago. Because this also coincided with a key range, a failed range expansion on the key range basis, which I haven't drawn out here because we've updated contracts. But basically, the idea was this was the key range here, from here to here. And price attempted to hold below the bottom of the key range, and in failing to do so, on this move here, I called that we would get a move to the middle of the key range, followed by a move to the edge, which is 1169. And retesting this move right here kind of gave us that slingshot we needed. So that's basic failed range expansion concepts here. Nice movement, and I think 1169 is that zone where we could see price get to very, very soon. And I updated the targets the previous session to include the new monthly target. So the new monthly target is 64.80 and 69.30. So that's the one we're gunning for. And the way that the volatility has increased, we could be there in a couple sessions. Just impressive movement. Okay, looking at the NQ. Here's the NQ. Didn't quite reach its midpoint just yet, so the key range is not in cement just yet, but the edges are still important. 4072 is the major CLVN that I mentioned. Still wants to be defended by bulls after this tail event, and that's still the case, as we saw yesterday. We have seen a failed attempt to get a new high after yesterday's tail, and now we're back toward the middle of that tail event. 4131 is an HVN here. I really, there's not any real edge right now. It seems like we're in inside day and overnight trading. We're trading between two HVNs, and we have this area here that could be attempting to get filled in with all this action. Fill it in, fill it in, fill it in. But right now, there's no real edge. We saw the initial impulse move, and now we're seeing the compression phase after that, the digestion phase. And there's no real edge in this zone. The edge is on the edges of the range. So if price were to come into 40.72, it's going to be a great spot to try a fade opportunity. Likewise, if price comes into 4,300 or just above that zone, that's an area to fade. Until then, it's probably going to see more of this development, just like the ES, just like crude oil, until we see expansion from that range. Once we see expansion, it's likely going to be another significant move, very similar to what we saw at the beginning of January. All right, now taking a look at the intraday time frame for some intraday guidance. What we see here is basically price holding off 40.91. That's been a significant area there. 40.90 to 4100 has been a significant zone of support right here to right here. I mean, look at that right there. Boom, boom, boom. So we've seen a lot of rejections there. But likewise, we've seen a lot of rejections on the top end up here, especially toward that 42.26, which is the key level on a higher time frame. And anything above 4,200 has been offered so far. So very similar to here where it was going down every time it came up. We're seeing that pattern right now. So all of these folks up here above 42.26 trapped, and right now we have a range that's developing from 40.91 to 42.26. I would expect this range just to continue to build out. So if price gets down into 40.91 to 4,100, you may want to look to buy. So that's the buy zone. 40.72 is a good first test buy opportunity. 40.91 is a good first test. When it gets to 4,100, that's when you got to start getting on alert. And these could be an opportunity to bring this thing back toward 42.26 short term. Failure to hold above 40.72, that's going to start a major wave down. If price gets up into the previous session's high, 42.11, up to 42.26, that's going to be a zone where bears are going to want to seal and defend for a rotation lower. So right now it's kind of a fade the edges. We're right in the middle, so there's not a whole lot really going on right now. But there is some potential movement down into that zone. So there is some points down into 40.91 right now. So that's all right now. We'll see how this thing plays out the rest of the session. Good luck and trade well.